Greetings and welcome to the Reconnect Podcast and TV Show. Today we are shooting episode 23 and here we are at Njays Family Restaurant and we have the distinguished guest, Lerato Sekantsi-Fuma. Greetings and welcome to the podcast.
Thank you.
For people who may not know you, Oka Patricia Waitang currently.
Oh, okay. So, my voice is creaking. Sorry. So I'm a financial advisor / investment advisor. So I'm currently working in the financial advisory space. Currently through my own firm. Yes. So the firm it's Strategic Wealth Managers. So that's the firm in which I do what I currently do.
This episode is brought to you by Njays Family Restaurant, your go-to family spot nestled in Maseru, West Lesotho, serving up smiles and delicious bites for all ages. Visit Njays Family Restaurant today.
For your background, your educational background, or now,
Okay, so educational background. Well, let's go far back. So primary school in Nili, SOES, then high school, Lesotho High School, and then my first when I went to varsity, what I did was I went to National University of Lesotho. I did a BSc first year, and then after that, then I transitioned into a South African university at the University of Pretoria. So there I studied BSc Actuarial Science and Financial Mathematics. Then post that, I've been doing a lot of stuff. I've attempted some honors degrees that didn't work out. And then after that, I went to study at the University of the Free State. I studied postgraduate diploma in financial planning law. Yeah, so basically that's it. And then currently now I'm pursuing a CFA. And I'm sitting for my level 1 in August of this year.
What is CFA for people who may
not know? Oh, okay. It's a Chartered Financial Analyst. So it's an international certification that is run by Institute, the CFA Institute, that sits in the US. But it is a finance degree that's, is it even a degree? I would say it's equivalent to a master's degree. It's equivalent to a master's degree, but you do have 3 levels that you write, but they're all about being a financial analyst. And then you can either be working in the portfolio management space, the private market space, or the personal advisory space. Yeah.
So, you said your company does...
So the company that I currently run is Strategic Wealth Managers, and what we do there is we do personal financial advisory, and we also do investment advisory. So that's basically what we do. We take people through the whole financial planning process, which is like a 6-step process in trying to say, here I am today financially. I might not be doing so well, but this is where I want to be. So we sort of get people through the process to say, this is where you are today, through the financial planning process, through your personal management, your budgets, trying to get your retirement plan going, your investment plan going. So basically we try to say, what is it that you have to do with your money today in order to get where you want to be financially. So most of us, you'd find that there's a project Blue Sky, which is where we want to go financially, but we don't know how to get there. So the firm basically takes individuals and tries to take them through that journey to say, here's where you are today, these are the tools that you need, and then we walk the journey with you, to make sure that then you get to the ultimate goal that you want to get to or achieve financially.
You do lots of great stuff.
Thank you.
So usually, like, but for us, sa lately into the investment whole kapa ba re ha bana tšhelete o ka reng ho bona
Visit TM Properties and Real Estate Investment Company. They are located at Medcash Complex. Their services include property evaluation, site inspection, property survey, property investments, property management, property rentals. They buy and sell property. Visit today.
First of all, is getting the right state of mind is the first step, right? If you have the right state of mind, then it becomes so much easier for you to start doing what it is that you want to be doing. So chelete does not have to do with it. There's never a time that chelete is going to be enough. Money, like I was saying, is chelete, right? It doesn't even matter if today unale 1,000 to 100,000 or a million. When it comes to life, there's what we call lifestyle inflation. Your money quickly adjusts to where you are. So, for instance, if I didn't afford, if I had 1,000 rand today, I'll do what I can do within 1,000. Quickly, if my income were to go to 10,000, I'm going to quickly find things that are going to fill that 10,000. That is how you normally experience life, right? So money will never be enough. It just depends on where you are. So if I'm at 1,000, I'll feel like if I get to 5,000, then it will be enough. But when I get to 5,000, quickly my expenses and my lifestyle quickly adjust to that, and I'm at 5,000. And after a year, I'm feeling maybe the 5,000 is not enough. I probably need 10,000. So that's what we call lifestyle inflation. So your lifestyle always adjusts. So it means no matter at what level of income that you are, it is never enough. So then how do we do it is, Hokala is about a mindset. It's about you deciding today to say, this is what I want financially. And then once you have decided is, what are the necessary steps I need to achieve what I want to achieve? So it comes like nothing in life is ever achieved through doing nothing. So even putting in the work and the sacrifice, to have graduated and to have a degree means you studied, right? Because I remember when I was in first year doing my BSc, because I did a BSc general, there are a lot of people who didn't pass when we got to the end, right? And people who were even more capable than you were, who their JSE, is it what you call it? GSE? Yes, the Form E results, right? The CSC results. The CSC results were even better than yours, but they didn't make it, right? And experience would have said, if you had passed with the flying colors, it would mean that your first year would just be just as great. And you find that is not how it goes, right? So you need to put in a little bit of effort. So if you want your finances to look a certain way and your life to look a certain way, you need to put in the work and the sacrifices. So you can start, there are different platforms. So what we do is we set out a financial plan that says this is what I want to do. The same way and then okay, now this is your financial plan and this is how it looks like. Foundation and build our way up from there. So once we've gotten that plan and we've done the consultation, now we say, okay, and how much can you afford? There are different platforms out there that can allow you to invest from as little as 10 rand, 50 rand. It's just that there is lack of knowledge, and because there's lack of knowledge, and most of the time you find that because of experience, people have been taken advantage of because of the lack of knowledge. There are financial instruments or financial things like triple and your Ponzi schemes, and people were getting ridiculously high returns. And one of the first questions, and that is the worst question that you can ever ask, because it means how and it doesn't work like that in the investment space.
What inspired you to get into
Investment?
Or were you always like this?
No, so you see, when
Looking for fast, reliable internet? Visit Jenny Internet Lesotho today.
when I started started out back in the day. I'm not that old, but I'm past my prime maybe, or I don't know. But so what happened was when I first started, when I was in varsity, because I told you I studied actuarial science, I thought I was gonna be this actuarial analyst, and I'm going to work in some big firm. But then my first job, I worked in investments. So I worked in investments, and I think that opened up my eyes in terms of what was out there when it came to the world of investments. So then I started being very much interested and intrigued by the world of investments. So while I was there, then I was like, maybe I'm going to pivot. Because then the other thing that I realized was when it came to actuarial science, it's very theoretical. And through the interaction that I was having with people, I realized that I liked impacting people, interacting with people. What I said to them probably made them feel better, you know. And as a financial advisor or financial planner, people always think you're just there to talk numbers, but I'm telling you, those consultations are therapy, you know. And you talk to a person comes in a session, they're not feeling so good, they're depressed, the situation is not looking so good, so it's just a depressing situation, if you may put it like that. But after that consultation, you come out of that conversation with a particular individual feeling that, okay, I know that I'm not in such a great position, but at least there's hope that I'm actually going to be able to get there. So through those interactions that I was having, I realized that, okay, I actually like talking to people more than sitting in a corner of my laptop and running models as an actuary. And I soon realized that, okay, investments are very interesting. And one of the things that I was seeing was, because I was working in Cape Town, most of the investments that were being opened up, I'll call them new investments per se, were not coming from black people. And then the black people that we had were very few. That was one. Two, there was one particular IFA, which is an independent financial advisor, that was bringing in business from Lesotho, you know. And then this was, you know, and you see this thing, you're like, okay, so it really means that my people where I came from actually want to be doing these things. But why is this not being driven by an individual that actually knows who they are, who knows how they grew up, who knows their challenges, and who knows their day-to-day experiences and challenges? So that's when I was like, maybe this is what's for me now. So then that's when I pivoted from actuary to investments.
Well, can you share more about inflation and what it is and the difference between savings and investments? Because some people, they save charity and they don't know about investing.
About investing. So you've touched on 3 points. So there's inflation, there's investing, and then there's saving. So this is what I'd put it like. Inflation always goes down, right? It goes up and down. But to the layman of the street, right? The purchasing power of your money, will it still be worth what it's worth, right? How well but hey, or even cheaper, you know. We used to compare all the time. But now a loaf of bread, 15 rand. At some point when I was growing up, it was around 10 rand or even less. So that shows you, okay, the same 700 grams at some point was 10 rand when I was growing up, to now being at 15 rand. It means the strength or the purchasing power of the money is going down, and that is a result of what? Inflation. So in real terms, it means, when I say in real terms, I mean the purchasing power to be maintained, right? My 100 rand yesterday should still be able to buy that, whatever it's able to buy. So let's say for 100 rand today, chips drink, right? So chips drink 100 rand, right? If we say the rate of inflation currently, it is at around 5%, because it will be mathematically easier. If you are reading a report about the Central Bank of Lesotho reports its monthly monetary sittings, okay, this is actually no. CBL says you'll cut it out. CBS says it is we have what we call the Bureau of Statistics. So the Bureau of Statistics publishes its monthly CPI, right, which is your consumer price index, which is your inflation, reports every month. So it will fluctuate, it will change every month depending on the different economic factors on what this value is. So let us assume that it is on average 5%. So it means last year what I could get for 100 rand, it now needs to go at 105 for it to maintain the same strength, right? So it means looking at that, if I had 100 rand last year, this year it has to be 105 for me to still be able to chips. And the minute that the 100 rand that I have does not grow or accumulate in line with the inflation, it means now I can afford less, right? Or I'm really interested in 105 but in 100 rand kapo ke na le 90 rand kapo ke na le 102. You understand? So when it comes to saving and investing, saving is just keeping money safe, derived from your saving. You're just keeping it safe. And keeping money safe does not necessarily mean it is going to grow with inflation. Because for me, with that scenario that I was putting is, for me to say that I have maintained the purchasing power of my 100 rand, it means next year that 100 rand should have gone to 105 in line with inflation, so that I can afford from year to year the same things that I was having last year, right? So that is saying I'm saving. So if you're saving, you're looking at nothing that is if you go into the investment or product provision world of financial institutions, you're not looking to put your money for a period that is longer than a year. So you're going to go into a less volatile market where you are safekeeping. You want at least your 100 rand to still be maintained. If you get a bit of interest, then you'll get a bit of interest. But saving is I'm safekeeping this, and it's money that I'm going to need in the short term, in the next year, in the next 6 months or so, right? Now, when we're talking of investing is now looking long term. And if I'm looking long term, I'm looking at that period that is over a year. So now I'm now thinking, okay, where do I want to be in the next 5 years? What do I want to do in the next 3 years? So when you go into investing now, you start profiling. You start saying, okay, this is what I want in the medium term, this is what I want in the long term. And then you look at the different investment vehicles that you can invest in order to get a return. So remember now, with time, you get the chance to take advantage of compounding. So with compounding, then you're earning interest on interest. You have the advantage of taking advantage of that longer time period and saying, I am going to go into a riskier or a more volatile investment product. Might have volatile or returns that go down in the short term, but in the long term, we're looking at an upward trend. So it means I might be invested if for some of us watching on TV and who have the freedom to do that, or are watching the news, like on LNBS, they now do it. But of man, I say by a few indicators there, right? If you're watching where you say MTN is now worth this much, MTN is now worth this much. So once you start going into investing, you are playing in that space where you are buying shares or in different companies, and now you're not saying to me, okay, have a long term view on my particular investment. What suitable investment vehicles can I go into? But so it means we can't take much of a risk, and then now we're looking at more stable investments, and then we are looking for, okay, I can invest in bonds, I can invest in equities, I can invest in money market securities, I can invest in direct shares, in unit trusts, like the list is endless on now what different products are out there. But with investing, remember, we're looking long term, you're looking to take advantages of the financial markets, whereas with savings, you're just literally just trying to save, keep, and if you're able to earn a bit of interest on that money, you shall. But the main focus or the main aim with aiming is just preserving that capital that you started with. But investing, we are looking at growth.
Well, there is lack of knowledge, especially Sothomanan. Maybe that is why batswadi ba rona le batho ba bang ba lelang ba bang ba scam teng hobane ho dula ntse bua ka investment but ha ba tsebe hore na ba ka kala kae bua kae hore be di-investment tseno
tse nka bang di molaong kapo nka ba di ba tswela molemo, you know. Yes.
So what can you say to them ba follow which steps if they want to invest?
If ba batla ho invest. So when it comes to investing, I think with anything is the Central Bank of Lesotho is our regulator, right? So regulator, it means what is out there, who's licensed to do what do they recommend, what is safe, what is that, you know. So as a regulator, that is their mandate, to try to make sure that we have consumer protection. They did even bring out some consumer protection legislation that is looking at you as the consumer. Whoever way you're sitting in your space, to say the financial institutions now need to be responsible in terms of the financial products that they provide. So one, so having a financial advisor is normally very important, because as much as an individual that you will pay for their services, right? They are much needed services, because one, this is a person who has an experience with working with these different service providers, knows what's out there, and goes shopping for you. So for instance, when I know how right? You know, but it is a decision-making process that was involved in ultimately getting this. So in the same way, in order for you to get the right investment products, shop and shop at the different financial institutions, and unless so that was what was predominantly happening with our parents, where there was lack of knowledge, you know, they didn't know where to go. So having a financial advisor, I would call an advisor an expert. And so seeking the help of a professional or a financial advisor will help you get started and get yourself on track, because this person is going to listen to you. And then from that, you're going to draw a plan. And from this plan, from a risk perspective, which is your insurance, from an investment perspective, from a retirement perspective, from, you know, a lifestyle changes that you need to be making, and all that comes together, and then it really a plan. And then this particular individual is then going to say, for the investment products, this is the choice. These are the risks, these are the advantages, and because these are professionals who have gone through the training, and you as an individual don't have to be bogged down now to try to determine, because most of the time as individuals, return, right? But with the more it gives you, the higher the risk. And the higher the risk means the more likely you are to lose the money that you have put in. And most times, bless you, and most times, ufumana hore tjhelete eo re batlang ho ihudisa, re batla ho ihudisa ka sekgahla kapo ka pele, fela le jwale re sa batle hore e lahlehe, and yet ha o qala ho batla e hole ka pele bonono, e na le risk ya hore nkana ya lahleha kapo ya devalue kapo ya ba 10 rand no e kentse ho tlele 5 rand kapo ha e khutle at all. So then it opens up yourself to the crypto. You know how everyone likes it. You know, everyone loves cryptos, but cryptos are risky. But now, do you have the stomach to stomach that risk? If you have it, then go ahead. There are people who do it, and they're doing quite well. But it means they are risk takers, you know. And some people are very risk averse. Withdraw, which is not the case. Yeah.
So can anyone invest the cover like the age, because what's for our to invest, so they're just going to spend
The money today.
ka
What?
nako nngwe ba se ba le baholo haholo, ha
No.
ba sa na nako.
No, you can invest from whatever age, you can invest from with whatever amount, but the advantage of getting someone that's going to help you with your investment, a financial advisor, what is suitable for you, right? And what you feel it's within what I want. I know there's a notion here about who are like, nah, you want to save a long time and I get to age 55, but then what if you do get to age 55? You know? Because people always looking like, hanga so much well, tell it how they are what we call beneficiary forms. You fill out forms to say, in the likelihood of something bad happening, I want and Thapelo to have my, my investment. In the likelihood of it happening, I wanted to go to my parents, I wanted to go to my husband, I wanted to go to my kids. That is why there's beneficiation and the beneficiary forms that you fill out all the time, So that is to say your money will go to whoever you want it to go to, right? Two, if you want access to your money, then you need to say, okay, what are the right investment vehicles that I need to go into? Investment vehicle, but you don't want to run into the risk in that way. So you want to take it and say, I want access to my money if that's what you want. There are investment products there to make sure that you still have access with your money, but you still have returns linked to that money. Because the example it is losing value. Because 100 rand money won't be the same 100 rand tomorrow, right? In 5 years to come, I still sell it 20 rand. But really, we're not so really and 100 rand, and each year its value keeps on depreciating. So we want to make sure your money is appreciating or at least keeping up with inflation. So that's why you want to go into investing. You want to seek financial products that are going to help you to achieve this.
So what advice can we give to young people and maybe parents?
Parents what age? Young parents or?
Young parents and older parents.
Like, the time to start investing was yesterday, right? But the next best time to start investing is today. So there's never a wrong time to start. If our kala how then how because your parents probably didn't have the knowledge or your parents didn't have the finances to do so. But wherever you start, it is a starting point. You sit down with your advisor and then you start saying, and how your financial advisor, this person is like your life coach. The same way Ronaldo Messi. But I did coach coach you, hey, it's trainer. So your financial advisor is your coach. He's there. This is a person that is there to make sure and Cristiano Ronaldo, he trains like crazy to be as strong and as athletic at his age to be where he is, right? It is a sacrifice on his part to be as great as he is. So, Luella, in your own personal finances, you need to think, what are the sacrifices that I need to make? I need to pay an individual to help me to get there. Because at the end of the day, what I would have achieved far much outweighs the fee that I'm going to pay this person, right? It far much outweighs me, because like I was talking of your lifestyle inflation. How go 400 rand, it's enough. Very quickly, the 100 rand is going to become little, then you want 200. From 200, you want 400. And that is life. That is why the rich, do they stop working and say, billionaires are going to stop working? They're still working, right? And the reason why they're still working is because money is never enough. Never enough because when you have it, all of a sudden certain opportunities open up, right? I had the opportunity, all of a sudden you feel like, oh, I want to run a charity and help the less fortunate. Okay? So there's always something that happens, how nani capacity. So with trying to build your money, with trying to build your wealth, with trying to do anything, you're just trying to bring in that capacity, you know. You want to change the status quo, Wawan. So as a parent, start any day, or as any person in particular, parent, wana, whoever, start today if you can. Get the advice of a professional to help you go into the right investment vehicles, right? Let us go how we want to how it will no natural attack as you, but also can train in a base or like the Lawana, so you get the advisor, you start today, you start informing yourself. Some people, the best thing you can do is there are free tools out there, like this podcast, and that Thapelo is reaching out to me, and he's doing it on behalf of so many other individuals who are going to watch this, right? Who are now going to say, so there's an advisor. So there are financial products. So there's Central Bank of Lesotho, you know. So there's, you know, and then now you go out there with an open eye, you know. You go out there with an open eye. Are you asking the right questions to say, is this right for me? Is this wrong for me? You know. So that is where you need to start. You need to start today. Get the help of a professional financial advisor if you can. If you can't, then learn. Teach yourself. Some of these endless resources that are there. There's this podcast available, there are more available, there are books available, you know, so just equip yourself, learn, and try to see, now can't you make better financial choices, can't you make the ones that are going to be long term, you know. Then you start thinking of your life in stages to say, okay, when I'm 20, this is what I want when I'm 25, when I'm 30, when I'm 40, you know. And we need to stay away from the mentality of, what if I die, but what if you don't? You know, because what if you don't? We know from research, there's what we call longevity risk. People are now living longer, right? So it means at age 60, you're done and gone. No, people are not living to be 90. People are now living to be 100. So what if you don't die and you don't plan for your retirement, and you are supposed to live formal employment at age 60? And all these years, you've started working since you were 20, you are 60, 40 years later, you didn't save anything because you kept on saying, what if I die tomorrow and you don't die tomorrow? Now you're 60, you didn't die, you need to live off something because now you're not in formal employment. And at that point in time, you also need to change the chapter. I think life happens in chapters, you know. There's your active chapter where you're actively saving, and, you know, when age catches up with you, now you're still active but in different aspects, because you also don't want to be inactive, because when you're inactive you quickly deteriorate mentally and physically. So you want to always be sharp mentally and physically, but you need to transition with the different stages of life as well. And if you get to 60 and it's retirement, now you do what people in retirement do, you know. If you are taking walks, if you're consulting, if you're doing that, but we need to put in the right structures today to make sure that when you get to that retirement age, you are retiring well and your transition is very smooth, you know, and you're not a burden to your kids, you know. You're not a burden to the state, because as much as we get grants, but the grants that we get, we need to be honest, are not enough to sustain everyone, and the amount that we're receiving or that the elderly receive on a monthly basis is probably not even enough to take care of their monthly needs, you know. So we need to start thinking of things like that.
Do you believe investing can solve poverty, and also how?
If it can, I don't think it certainly can improve our lifestyle, but you need to also remember that poverty is a result of a lot of socio-economic and political, you know, things. So as much as we can try, we can definitely try to improve our lifestyles. We can definitely try to make sure that we are better than we were yesterday through investing. But at the end of the day, we need to still come to the set realization that probably not everyone can achieve what we are talking about today, you know. But the few that can, definitely it's going to impact them positively. without a doubt. It's definitely going to impact them positively. From a social and political landscape, could investing help? Yes, it could. It still help, because then, if you're looking at a government level, or you're looking more on a broader space, if you're looking at your fiscal policies and you're looking at your monetary policies, then it says, now as a state, what is it that we're doing? Do we spend more investing? Because when you're looking at government spending, you're saying, is government investing in infrastructure? Is government investing? And if honestly we say, our government's going to try to solve the problems of our people, if they try to look at it from that point of view, that we need to invest, right? We need to create infrastructure, create employment, because these people, when they're employed, then it leads to them being financially liberated. Then definitely we can find a way of ending poverty. But now we need to look at, it is no longer investing from an individual level, but is now looking at the macroeconomic level to say, now what are we doing as government? Are we really investing in government? Are we really investing in our youth? Are we making sure that our youth is the youth that's able to take advantages of where we are, in the world? Are we moving into the fourth industrial revolution? Are we, we need to evolve, and that also it needs to be an investment of some sort from government, in a way to say, we need to invest in infrastructure, we need to invest in our education, we need to invest in different areas to make sure that everyone now is being financially liberated. Because as government benefits, if our unemployment goes down, everyone in the economy is spending, and if we are spending, government gets its own taxes as well, so everyone wins.
What are your thoughts on foreign investment or foreign investment?
Foreign investments are essential, but now you need to also decide in what in particular we investing in, and the advantages that we are going to draw from those particular investments. So with any investment, like I said, there's always the risk, there are always the advantages, and there are always the disadvantages. So we do want to get foreign investment, right? That's going to come in the form of different areas that would be invested in. But now it's also to say, where do we want this investment to go? So as a nation, or whoever that wants to seek foreign direct investment, you need to say, this is where we are and this is what we need. Because now you don't need someone to come and tell you, this is where you should be investing, Thapelo. Thapelo needs to sit down and say, this is where I want my investment to go or to look like, or this is where I want to properly develop, right? And seek investment in that area, because that is what is going to make you to grow. Because now it's going to be a beneficial relationship where it is a symbiosis. You're the investor, is profiting, and you as well are profiting, right? So when you look at investments, whether it be from a macro level, a government level, foreign direct investment level, or an individual, you need to look at what is going to benefit me, and then go out there and see who can then come in. But foreign direct investment is important, because then it brings resources, it brings skills that as nations we probably would not have. But as nations, we now need to sit down and say, is this the particular investment that we want?
Thank you so much. Is there anything else you'd like to share?
I don't know. Nothing in particular that I would feel, but I think last words would be, as people and as a nation, we are changing, the world is diverse, the world is full of so much out there, whether it be investing or in whatever aspect that we are, any particular area of our lives. So the best thing that we need to do is, we need to keep on learning and educating ourselves, because through that we'll be able to achieve anything and everything that we want to achieve.
Oh, thank you so much. The last question, but forget high school, any career advice?
Career advice? That's a tough one, because I always think, Linda, I shouldn't have studied what I studied. But with that said, I have a friend. She's South African, and when we started our first year, and then I passed and finished my degree. She didn't do so well in her first year, and she ended up pivoting and going into become statistics, and she excelled, and she got distinctions. And where we sit now in the conversations that we have, I'm always in awe in where she is, So when it comes to career, there's nothing that is either good or bad, because even what was bad you just find a way of working around it. But when it comes to careers today, is everything is evolving and everything is so intertwined, right? And going back to that story, is on that particular day when she decided that I'm changing courses, for someone who was like, she needs to be an actuary, we would have been like, this is the worst mistake of her life. But it was probably the best thing that could have ever happened to her, because she learned to say changing direction does not mean that you failed, right? So when it comes to careers, people need to be willing to pivot, change with the times, you need to make yourself very marketable, right? So find out what is out there, and find out, if you want to make money, find out what is making money, because there are different careers and different courses for a reason. Like you said, you studied computer science, right? So it means you like your programming and everything else, right? And if you're in that space, now we need to sit down and say, okay, Thapelo, what is it that we can do? Where can we take advantage of your skills? So you need to now be looking, where are my skills useful? And these skills, how can I use them? So as a person who's coming out of high school, is what do I want to do? So most people are confused when they come out of high school. They've never had much experience in terms of economics, BSc, which was our pitfall. But where are my skills? Where are my interests? Because you always excel where your interests are. So you need to look at where your interests are and what is it that you like doing. Find the education that backs what you're interested in, and then start pushing, right? And start pushing, because as much as we might say education, we talk of outliers. You can say so and so is not educated, but they're doing very well. You can talk of your who's this guy? You can talk of your Apple guy, Steve Jobs. You can talk of, and start saying, no, he started in the garage. Yes, he did start in a garage, but not so many people were able to do that. But if you can do that, start in a garage and build Apple, then go for it. But if you're at a point where you can't do that, you need to find what is there, what makes you marketable, what makes you seen, and then start growing from there, So I think when we think of careers, most of the time we always think about them in reverse. We don't think where my skills and where my interests need to lie with what I'm studying, so that when the two meet, they can, catapult you to somewhere else. So I think that is how we need to start thinking about careers. Don't just think capacity material. You need to have a broad, sit down, have a business meeting or a company board meeting with your parents, if they're the ones who are guiding you. Get people who are working and people who are there to help you with the knowledge and make the right decision. Because if you have that meeting, I get a board meeting, I really mean it, because your parents are going to have a certain input. Engineer, right? So we already have 3 different career paths, right? Your parents who are very influential on you, they brought you up, but something that is probably different from what you want to do. Then there's also the world out there, so it's a lot of aspects that you need to look at. So really have that conversation. It's a tough conversation, but have those conversations with your parents, with the people who are around you, and ask around, the work of an actuary day to day really wasn't that interesting enough, you know. So what is it that you want to do? So when you bring all those things together, what am I good at? What are my interests? What are my aspirations? What are the people around me saying? Then you're able to come up with a very nice rounded choice. Okay, this is what I can do, and this is why I'm doing it, you know. And if you're in control of that choice, how first semester, first, you know, lecture, and they tell you but by the time we get done first year then you're able to say, am I willing to make the sacrifices in order to get through this, you know? Then the choice becomes easier.
Thank you so much.
Ke a leboha.